Hello, this is Mijun from Mijuron University. Let's begin today's Mijun News for June 30th. Welcome to Mijun, where we continue to uphold the fundamentals of United States stock investing as always. Mijunban viewers, I hope you had a relaxing and rewarding weekend. In my case, it wasn't exactly relaxing, but I did have a very rewarding time. I think I worked for about 20 hours over the past 2 days. I promised you all a live lecture on the upcoming July 3rd. So, together with Chief Executive Officer Kim In-jung, we plan to announce the stocks of interest for the second half of 2025. I worked hard on making the presentation yesterday and the day before. Since I made it very thoroughly for the first time in a while, as you can see here, it's 34 pages. It took me 2 full days to make 34 slides. So the stocks of interest for the second half of the year that I'll be presenting to you this time are, personally, I think these are very promising stocks that investors should pay attention to and follow in the second half of 2025, and I plan to select and share them with you. As you can see here, I tried to find the best stocks in 5 areas: artificial intelligence infrastructure, optical materials, solar, and data center SaaS. And the numerical analysis of these stocks will be conducted by Chief Executive Officer Kim In-jung of ChoiceDAQ. I hope that many of you will join us for this live lecture. And before we officially start today's broadcast, I'd like to make one announcement. I just shared a post with you on the Mijun YouTube channel's community tab. It was to let you know that there are only 2 days left for this discount event. And that's not all. I made a big decision under the influence of Mr. Kim In-jung. Please take a look for a moment. Now there are only 2 days left for the 50% discount event on the Mijiwon All-in-One membership. It ends on July 2nd. And one more thing. If you join the membership this time, you can participate in the Mijiwon special live lecture held at 9 post-meridium on Thursday, July 3rd. I emphasized this part, didn't I? The topic of the special lecture on July 3rd is, as I just showed you, revealing and studying together the United States, China stocks of interest for the second half of 2025. Alright, and also, there's one new piece of news today. Chief Executive Officer Kim In-jung is now offering the Choice Star membership at a lifetime discount. So after thinking about it carefully, I decided that I should hold the same event as well. So, for those who are newly signing up this time and for our existing members who are extending their memberships too, I will make sure to offer everyone the opportunity to remain a Mijuon member at a 50% discounted price for life. The reason we're offering these benefits is that moving forward, both ChoiceDAQ and the Mijuon membership aim to continue investing successfully and happily with you all for the next 5 or 10 years. I hope you see it as our commitment to that goal. Alright then, with this good news, let's get started with today's big investment news for June 30th. One of the reasons I was so busy last weekend, besides preparing for the live broadcast, was because of something else as well. So many people joined the Mijun membership and posted various questions. But this time, I'm actively promoting the Mijun membership for the first time in a long while. So, while many people are joining, I realize I haven't actually given a proper explanation about the Mijun membership. So I'd like to take this opportunity to explain the details a bit more and then officially start the broadcast. For those who aren't interested in the Mijun membership, you might feel a bit uncomfortable, but if you wait just a little, I'll get to the prepared content soon. First, to the person using the identification Seoyun, since it seems like the membership comment feature isn't available, I'm replying here. After seeing the news about the renewal, I thought about it for 3 years and finally joined yesterday. What I'm most curious about is, besides getting access to more information, are there any other benefits for membership members? Do you also provide information on which stocks to buy and sell? You asked an important question, saying you really want an answer, and if you look here, someone with the username Dandan also left a question. I first got to know Miju through the Hawaii mansion, and I liked it so much that I immediately bought the book and became a subscriber. I listened to your broadcasts diligently, and your sincerity always gave me great strength. I'm currently in a difficult financial situation, so I hesitated a lot about joining the membership, but I decided to tighten my belt and joined with determination. Please be a reliable companion for me. I'm curious about how to make use of the membership. It would be great if you could briefly explain how to use the site. So since so many of you have asked about how to use this site and how to make use of the Mijun membership, I'll give you a brief explanation. First of all the content of the Mijun membership can be accessed on the pending website. I've put the link here and you can view it there. If you prefer to use your smartphone, just install the app called Banding first. Log in and then you can use it. And there are more than 10 different series running in the Mijun membership. On weekdays, sometimes the number of contents we share exceeds 20. So it might be difficult for you to go through all the content I share, so along with the main content, I'd like to recommend the following methods. Alright, it's up now. For articles like Omiju and the United States Stock Market Outlook, please check the key summary at the very beginning. I summarize every article in 5 lines, and if you read the summary and think this article is really important, if that's your judgment, please read the entire article. And at the end of each article, I always write a comment from me, Jun. I'm expressing my personal opinion there, so I hope you'll read that part as well. You've invested your valuable money to join the Mijun membership, so you should definitely hear my personal opinion. And secondly, there's a post that I emphasize as Mijun's recommended content. I really hope you'll read this one as well. From my personal perspective, the content that can really help you with your investments has the title Mijun's recommended content at the front like this. And third, there are times when it's hard to consume content in text format. When you're commuting or driving, in those situations there is content available in audio format. The first is the Mijun podcast, and the second is the Today's United States Stock video. I recommend watching these kinds of videos. Especially the Mijun podcast mainly features detailed stock analysis of major United States stocks. Through the Today's United States Stock video, you can watch interviews with Wall Street experts or CEOs of American companies dubbed in Korean. Now there's one more thing. Once every quarter I share a series called Earnings Season On and Sneak Peek at Smart Portfolios. These 2 series are valuable opportunities to understand the latest trends of investment companies and the subtle moves of major players. So I hope you make sure to take advantage of the Earnings Season On and Sneak Peek at Smart Portfolios content that I share every 3 months. Lastly, I share my real-time trading status whenever I buy or sell stocks, but simply following my trades can be risky. That's because every investor has different personal circumstances and investment goals. So when I trade a particular stock, it would be good to understand it as he currently sees this stock as the most promising, or the momentum of this stock has dropped now, rather than just copying the trade. I hope this was helpful in answering your question. Especially, what about Dandan? As you can see here, you're not in a financially comfortable situation right now, but you still signed up for a paid membership. I hope you won't regret joining the Mijun membership this time. I will do my best to support you as much as I can. Once again, thank you very much. Now, let's get started and go over the current situation of the United States stock market. Since today's the Monday broadcast, let's take a look at the trends from the past week. At a glance, you can see a really beautiful picture here. Most of it is green, and the green colors are very vivid. Also, the tech stocks we care about, especially the top picks that weren't supported, showed a really good trend. If you look here, Advanced Micro Devices went up more than 12%, Nvidia rose 9.66%, Broadcom 7.74%, Amazon nearly 6.5%, Google 7.1%, and Meta 7.5%. It feels like the unsupported top picks had a feast. If you actually look at the movements of the major United States stock indices, the Nasdaq 100 performed the best. Tech stocks, especially the large cap ones, did the best. Over the past 5 days, it created a sharp upward trend with a 4.04% surge. The second best performing index was the Dow Jones, which went up by 3.85%. Third was the microcap small stocks, which rose by 3.8%. Lastly, the S&P 500 rose by 3.47%. So overall, you can see that stocks of all sectors and all sizes went up. Now, if we look at the performance by the 11 sectors, except for the 3 sectors at the bottom, all the other sectors surged. Communication services performed the best, rising by 4.71%. That's because Google and Meta surged. Second, technology was up 4.25%. Third, consumer discretionary, which includes Amazon, was up 3.75%, making it the third best performer. The breadth of the market must have widened significantly as well, since it's 70 to 17. Out of 10, 7 stocks are currently trading above their 51-day moving average. That's how you can see it. Even stocks with good long-term trends have surpassed 51%. Next is the Volatility Index. The Volatility Index continues to show a stable trend. Staying at 17.05, the current market has become much less volatile. Therefore, there is little chance of sudden drops or surges, showing a very stable trend. Next is the Fear and Greed Index. I mentioned that the market continues to remain in a very good condition. It is in the greed phase. That means the market sentiment is good, but it's not getting too overheated. Therefore, it can be interpreted that the momentum for a gradual rise is being maintained while keeping a moderate temperature. Next is the market score provided by ChoiceTac. It's been staying in the greed phase for over a week now. But even so, what's the message I've been telling you for about 2 weeks now? Right now, if you look at the American Association of Individual Investors survey results, there are so many investors with negative opinions. That means there's a lot of cash on the sidelines. So thanks to this cash, it's very difficult for the market to fall further right now. On the contrary, I believe the upward trend will get stronger, and that's the outlook I continue to maintain. Lastly, here are the results of Mijaon's top picks. Over the past week, all of Mijaon's top picks showed gains except for one stock. At the end, Palantir had been doing really well recently, so you can see it as a technical correction. First of all, the stock with the strongest trend was SulaSutica. SulaSutica surged by as much as 12.9% in just 1 week, and with that, its year-to-date return is now hitting 65%. Secondly, Advanced Micro Devices also surged by 12.14%, competing with SulaSutica. Third is NVIDIA, which also jumped by nearly 10%. Fourth is Curadao Technology, up 9.33%. Uber, up 9.25%. Taiwan Semiconductor Manufacturing Company, up 9.10%. Bureau Deocom, up 7.74%. And Meta, up 7.52%. Bitcoin has risen by 7.20% and is now at 107,550. Google is up 7.14%. Bit is up 6.67%. And Amazon is up 6.49%. Vistra Energy is up 5.37%, Strategy is up 3.84%, Talon Energy is up 3.19%, Trade Desk is up 1.61%, Nextracker is up 1.21%, and Tesla is up 0.46%. Lastly, only Palantir recorded a negative return of 4.78%. So, over the past week, the United States stock market has created a truly beautiful time, especially the artificial intelligence beneficiary stocks that we love performed the best. Now, let's move on. Will the United States stock market be able to continue this trend during the week starting today and throughout July, which begins tomorrow? I'm thinking of focusing today's broadcast mainly on this topic. First, let's check the movement of the Monday Futures Index. The Dow Jones is up by 0.52%, S&P 500 futures are up by 0.48%, and Nasdaq futures are also surging by 0.73%. The atmosphere is really good. There was a good reason for that. Last Friday, the United States stock market, which had been doing well, suddenly came to a halt. That was around 1:51, so just before 2 o'clock when the upward trend suddenly slowed down. There was a reason for that. President Trump suddenly got angry. He said he would stop all trade negotiations with Canada. You're probably wondering why he would suddenly stop all trade with Canada and what happened. But before we could even figure out what happened, suddenly there was more good news. After Trump's announcement to halt trade negotiations, Canada decided to withdraw the digital tax, which was a huge piece of good news. If you look at these two photos, here Trump looks angry, but then his attitude suddenly changes, and now the photo shows Trump with a look like, All right, I'll let it slide. The photos are being expressed in a very interesting way. Let's take a quick look at what happened. Canada has withdrawn its digital services tax in order to resume trade negotiations with the United States. This measure came right after President Trump of the United States declared a halt to all trade negotiations in response to Canada imposing the digital services tax. So is that why President Trump suddenly got angry on Friday? Because Canada, starting today, Monday, starting June 30th, they will impose what's called the Digital Services Tax or Digital Services Tax. He suddenly got angry while talking about this. As you can see here, the 3% tax that was going to be applied retroactively was expected to affect major United States tech companies like Amazon and Google. So it's not just being implemented from this year, but it's retroactively applied from 2022. That means they were going to collect all the unpaid taxes from 2022 up to now. So it was really bad news, but now there's some positive news that this has been withdrawn. Let me share my personal opinion with you. What about the news of Canada's withdrawal of the digital tax? In the short term, there is a lot of room to interpret this as a very positive signal for the market, because it's highly likely to be seen as an example that President Trump's very tough negotiation style is actually working. And for now, one of the trade conflicts between the United States and its major trading partner, Canada, has been resolved. As I mentioned, the market hates uncertainty the most. So just the fact that the conflict is being resolved can be seen as very positive for investor sentiment. Now, another thing is that this digital tax directly targets major United States tech companies like Google, Amazon, and Meta. So what does it mean that the tax plan has been withdrawn? Those companies will have less direct financial burden. Especially since it was supposed to be retroactively applied from 2022, there was a possibility of facing a huge tax bomb for 2022, 2023, 2024, and 2025. But now that's gone. Therefore, I personally believe that this is very likely to act as a positive factor for the overall United States stock market, including the tech-heavy Nasdaq. So that's probably why the Nasdaq is rising the most right now. All right, let's keep reading. And also, what about this news? There's a possibility that this could be seen as a success story where President Trump got what he wanted through hardline measures like tariffs or halting trade negotiations. That's what I'm saying. In future trade negotiations with other countries, it's highly likely that President Trump will use a similar strategy. And there could be growing expectations in the market that this approach might actually work. So, in the past, people used to worry, isn't Trump going too far? But from now on, you can interpret it as growing expectations that President Trump will handle things well this time too. Now, of course, this kind of brinkmanship, pushing the other side to the edge to get what you want, is what's happening here. That approach might work in the short term, but in the long run, I would say it greatly reduces the predictability of the global trade environment. On top of that, this time the other country is Canada, a traditional ally. So now the whole world is watching as a traditional ally like Canada is being humiliated. Therefore, in the long term, it could cause cracks in diplomatic relations, and I would say it could also negatively affect America's global leadership in the future. So, just like last week, there's a high chance that the United States stock market will start this week with great momentum. As I keep saying, momentum is just like when we throw an object with force. So when something is moving in a certain direction, it's reasonable to think that this trend will continue. That's how you should see it. But this direction can change at any time. We call this a catalyst. So momentum investing is about believing that this direction will continue until a catalyst appears. Therefore, as momentum investors like us, it's important to keep a close eye on market catalysts and stock-related catalysts. Now, let's take a moment to check what catalysts are lined up for this week. First, June 30th, Monday, that's today. There's a piece of news about the stock that's currently the hottest topic in the market. The talk of the town is Circle. Some people have made a huge fortune because of Circle, while others are currently stuck with it. There's some very important news related to Circle. There's a quiet period which is called quiet period in English. This ends today, and that's what I'm talking about. Market analysts will now be able to announce investment ratings. So if prominent analysts give positive evaluations about Circle today, Circle could see further gains. And if the dominant opinion is that Circle is not a good investment right now, then it's possible that Circle's stock price could plummet again. That's how we can assess the situation. Personally, I don't talk about Circle on the broadcast, because in my opinion, this stock actually looks better. That's my personal judgment. In the video I shared with you on June 16, I said that the next beneficiary after artificial intelligence is here. Stablecoins are on the rise. Bet on this stock. As those of you who watch this broadcast know, the stock I recommended was Coinbase. So far, the stock price has surged by as much as 45 or 46%. Also, on the July 3rd live broadcast, I was really debating whether or not to include Coinbase. So, my conclusion is that for now, I'll leave out Coinbase and recommend the other 5 stocks to you. But it's not because Coinbase looks bad or anything like that. Personally, I have a very positive view of Coinbase as a stock. If the stock price drops a little more, actually, it dropped a lot on Friday. If it shows any further decline, I think there's a very high chance that Coinbase will be included in Mijion's top picks. I can tell you that in advance. All right, let's keep going. On Tuesday, July 1st, Tesla will announce its earnings. It's an opportunity to see how many vehicles were delivered during the month of June. And then at 9:30 in the morning, Jerome Powell, the chairman of the Federal Reserve, will speak. He is scheduled to participate in the 2025 European Central Bank Forum. Now, what he says here will be very important. Whether he takes a dovish stance or a hawkish stance is something investors are paying a lot of attention to. And the biggest catalyst this week is, of course, set for Thursday. Normally, it's announced on the first Friday of every month, but this month, it's being announced on Thursday as an exception. That's because the stock market is closed on Friday. It's 8:30 in the morning. The United States Bureau of Labor Statistics is releasing the United States Employment Report for June. Economists expect that new jobs decreased from 139,000 in May to 120,000 in June. And as for the unemployment rate, it is expected to increase from 4.2% to 4.3%. Now, whether these expectations will be accurate, or if the economy will actually worsen, or perhaps turn out better than expected, depending on this, the direction of the United States stock market could change a bit. That's a reasonable prediction. Lastly, on Friday, the United States stock market will be closed for the Independence Day holiday. In addition, Mijuan YouTube channel will also take a day off. Today, there aren't many stock news items worth discussing in depth. So, with just one day left until July, I'm focusing today's broadcast on the outlook for the United States stock market going forward. Now, before we take a closer look at the outlook for the United States stock market, let me briefly go over some stock-related news. First, let's talk about Tesla. There's some amazing news that Tesla has completed its first fully autonomous delivery. What that means is the car delivered itself from the factory to the buyer's home. No human was involved in the delivery. So, this amazing news has become the talk of the town and put Tesla in the spotlight. And Tesla has another piece of good news. This is some hot off the press news that was announced today. The good news is that Tesla has launched the V4 supercharger in China. The V4 supercharger is Tesla's fastest and highest output electric vehicle charging system, and it's said to provide up to 500 kWh of charging capacity. So you can see this as the first time it's been launched in China. Even with all this good news, Tesla's futures index is still declining. You might be wondering why the stock price is falling despite such positive news. It's because of this news right here. Tesla's chief executive officer, Elon Musk. Recently, Elon Musk strongly criticized the latest version of President Donald Trump's tax and spending bill, calling it completely abnormal and destructive. As you know, they had a fight once, and these remarks came just a few weeks after they reconciled. So, by once again criticizing President Donald Trump's most important bill so harshly, there are growing concerns that their relationship might deteriorate again. Next is news related to Meta. There are reports saying that Meta is taking away all of OpenAI's talent. Everyone, I already shared this news with you once last week. Early last week, there was a report that Meta had hired a prominent OpenAI researcher named Trapit Bansal. And in addition, they also hired 3 other researchers. They lost as many as 4 talented people. And after that, they have continued to aggressively recruit artificial intelligence experts from Open Artificial Intelligence. An additional 4 people have been confirmed. So right now, Meta is working hard to poach the best minds from OpenAI, and that's the news that's being reported. There's one more piece of news related to Meta. It's that they're raising an incredible $29 billion to expand their artificial intelligence data centers. As you can see, Meta is really going all in on artificial intelligence. From a shareholder's perspective, I can say that there's a lot of anticipation about how effective Meta's all-in approach will be. All right, then let's move on to today's main content. The United States stock market closed on Friday just slightly above its all-time high. All right, I'm really curious about the outlook from here on, so let's go over it together through this news, through this article. The United States stock market seems set to close June near record territory, ignoring the United States airstrikes on Iran, the ongoing global trade war, and even Wall Street's old saying to sell in May and go away. Both the S&P 500 and the Nasdaq Composite Index hit all-time closing highs on Friday. Each surpassed their previous highs reached in February and December, respectively. Now, let's first look at the factors that have boosted the stock market. Let's start by figuring out why the mood is so positive. The Dow Jones Industrial Average, S&P 500 and Nasdaq Composite all hit their 52-week intraday lows on April 7th amid a wave of selling that followed President Trump's Liberation Day tariff announcement. However, the rebound after that was quite dramatic because there was news of a 90-day tariff postponement, so it had the effect of making the market rise immediately. Now, if you look at the returns from April 1st to the end of April, the Dow Jones only fell by 3.2%, and the S&P 500 dropped by 0.8%, and in the case of the Nasdaq, it actually recorded a 0.9% gain during the month of April. Now, even after that, this strong trend continued. In May, the S&P 500 rose by 6.2%, and up until now, in June, it has increased by 4.4%. The Nasdaq rose by 9.6% in May, and so far in June, it has recorded a 6.1% increase. So this result poured cold water on the old Wall Street saying, sell in May and go away. If we had really left in May, it would have been a terrible decision. That's how we can sum it up. So thanks to this rise, what happened to the S&P 500 index? After falling more than 15%, it recovered to an all-time high at the fastest pace in history. What about the S&P 500 index? From the previous closing high on February 19 to the closing low on April 8, it dropped by about 18.9%. But since the index closed at an all-time high on Friday, it only took 89 days to recover to its previous record high. It didn't even take 3 months, I'm sure you all remember. Back in April, when the United States stock market dropped significantly, I kept emphasizing this to you all. A correction phase usually regains its previous high in 4 months, so there's no need to worry. But this time, it didn't even take 4 months. It took less than 3 months. So, this was an incredible recovery that surpassed the previous record of 90 days set in 1998. Here comes Sam Stovall, the chief investment strategist at market research firm Center for Financial Research and Analysis Research. He says this, "History had already told us that such a thing would happen. It took 22 days to go from an all-time high to the minus 10% threshold. Now, usually it takes more than 80 days. So this time, even though there was a correction, it came way too quickly. Now, since it dropped so fast, we just need to see what happened afterward. So, if we look at the fastest quartile cases where there was a drop of more than 10% according to historical statistics, these are also the cases with the shallowest declines and the ones that recover losses the fastest. Now, I don't know if you remember, but I've talked about this before on my broadcast. A bear market doesn't suddenly drop all at once. Usually the account falls little by little over a long period. But this time, it didn't fall like that. It dropped very sharply and rapidly. When it drops this quickly, it usually doesn't lead to a bear market. I've mentioned before that there's a high possibility it will stop as a correction. And as for corrections, because it rises as quickly as it falls, on average, it breaks through the previous high after about 4 months. There's this kind of historical statistic. This time, because it dropped so quickly, it went up just as fast and recovered again. You could sum it up like that. In other words, a rapid decline is often accompanied by a short period of bottoming before the market bounces back up. It bounces back up just as quickly, that's how you can see it. And Samstowal was very curious about what happens historically after stocks show this kind of recovery, when they fall so quickly and then rise just as quickly. Here it is. He presents some encouraging statistics showing that stocks often tend to continue rallying past their initial peak. What about Samstowal? After recovering all the losses from a previous decline of 10% to 20%, there has typically been an additional gain of 6% to 10% on average before entering a new drop of more than 5%. So the 10% to 20% decline shown here refers to a correction. Usually, a decline has to be over 10% to be called a correction, and if it goes over 20%, it's not a correction anymore. It's a bear market. So, after a correction appears before it drops by about 5% because it has risen so much, it tends to go up an additional 6% to 10% before a technical correction happens. And then the correction comes. This is what they're talking about. And this also coincides with the strong periods in terms of market seasonality. What that means is this. Historically, the S&P 500 index, when both May and June saw gains, the S&P 500 ended the year higher, 77.1% of the time. This year, both May and June were positive, right? So when both May and June go up like this, there's a 77.1% chance that the market will rise further by the end of the year. Therefore, it's possible to conclude that there's a very high chance that stock prices will continue to rise in the future. And July also tends to be a very strong month. Looking at historical statistics, July has been the strongest month for the Dow Jones Industrial Average and the S&P 500 in terms of average monthly performance. The Dow's average performance in July is 1.5%. The S&P 500 has an average increase of 1.7%, and the Nasdaq shows an average rise of 0.9%. Here it is, the Dow Jones. In February, May, and September, it showed a negative average, and the best month is July, which is right now. There are past statistics showing a sharp rise of 15%, and then the second best month was December. If you look at the S&P 500, there are only 2 months with negatives. February and September usually show negatives. The best month is July with a 17% increase, and the second best months are December and April, which tend to rise by an average of 13%. The Nasdaq moves a bit differently. If you look here, only September is negative, and the other months are all positive on average. Also, the month with the biggest increase is different from the S&P 500. On average, January had the best performance with a 2.5% increase, followed by November with 2.1%. Then May and April both had a 1.3% increase. Lastly, July tends to show an average increase of 0.9%. Therefore, July is usually very positive for all 3 major indices. This could be a bit more helpful and useful information. These historical statistics of the United States stock market suggest that there is a high possibility that United States stock prices could rise even further, conveying this positive statistical fact. However, despite that, there is nothing certain in stock investing. You can't trust it 100%. Therefore, from our perspective as investors, we need to think about what catalysts could disrupt this trend. In July, there are several macroeconomic risks that we need to be cautious about. First of all, the first one is a big and beautiful bill. The White House hopes that President Trump's big and beautiful bill will be signed before July 4th. The stock market, as you may remember, had an incredible rally after President Trump's victory in the presidential election last November. And one of the reasons for that was President Trump's promise to cut corporate taxes. Because lower corporate tax rates reduce company expenses, it's expected to benefit the fundamentals of stocks. President Trump cut corporate taxes in the Tax Cuts and Jobs Act of 2017 during his first term, and many of these tax cuts were scheduled to expire at the end of 2025. But now, this new tax law, one big, beautiful bill, promises to extend and expand these cuts. However, despite this, it's being said that stocks might not see the same boost as they did in 2017. We should take a look at what this means. Dan Sue Kelly, the head of Morgan Stanley's Wealth Management Market Research and Strategy team, appears. In 2017 and 2018, the corporate tax rate was originally 35%, but it was lowered to 21%. And what was the first ripple effect of that? It had a significant impact on overall corporate profits. As the tax rate decreased, there were a lot of companies whose profits increased. But this time, they say it will be less significant. Well, that's because if Congress doesn't pass the tax bill, when the previous bill expires, corporate taxes will actually go up. That's how you should see it. The stock market could react negatively to the impact on corporate profits. So if the corporate tax rate stays at 21% this time, it's basically the same as before. But if it doesn't stay the same and the corporate tax rate actually goes up, then we can't expect the United States stock market to surge like it did before. Most people perceive passing this bill as something that will promote long-term growth, be business friendly, and encourage spending, and I think so too. And this will be good for the market in the long run, to put it positively. But in the short term, if the bill passes, Congress will vote to raise the debt ceiling. And if the debt ceiling is raised, it means the Treasury will have to refill the Treasury General Account. This will actually absorb liquidity and pull money out of the market, so in the short term, it could have a negative impact on the market. That's how it's being explained. I'd like to share my personal opinion on this matter. There are concerns being raised that liquidity in the United States market will weaken and money will flow out. From my perspective, I think this issue is very likely to be resolved through the activation of stablecoins. As you all know, there's the so-called Genius Act. The most important point in this Genius Act is this. It requires stablecoins like USDC and USDT to be backed 100% by United States dollar cash or short-term United States Treasury bonds as reserve assets. The main point is that it requires regular accounting audits. What this means is that companies like Circle or Tether issue stablecoins, right? Then we buy those stablecoins. So what do Tether and Circle have to do? They have to use our investment funds to buy United States dollars or United States Treasury bonds. If they don't do that, it's not allowed because they have to undergo regular financial audits. In other words, if the global usage of stablecoins increases by $100 billion, it's the same as creating that much new demand for United States Treasury bonds. And they're more likely to buy Treasury bonds than just hold cash because they earn interest. So, from both Circle's and Tether's perspectives, it's much more likely that they'll invest in short-term United States Treasury bonds rather than just holding United States dollars in cash. Now, what that means is this. Up until now, only foreign governments and central banks have bought United States Treasury bonds, but now it means that a new and massive buyer from the digital economy is emerging. For those of you in Korea, it might be hard to truly grasp just how significant this is. Because South Korea is such a prosperous, advanced country. But what if you were someone living in Turkey? As you know, in the case of Turkey, the value of the currency is cut in half and keeps dropping. That's because inflation is so high. Now, if we are citizens of such a third country and the money we have keeps losing its value due to inflation, in that case, of course, we would buy United States stablecoins through Circle or Tether because United States stablecoins are pegged to the dollar and the value of the dollar doesn't drop. That's why there's a very high possibility that a huge number of people will invest in stablecoins through Circle or Tether. We can summarize it like this. Therefore, if stablecoins become more active, the demand for United States dollars and Treasury bonds will inevitably surge, and this is highly likely to solve the problem of rising United States Treasury yields. Let me say it again. When the price of United States Treasury bonds goes up, the yield goes down. If demand surges, the price has no choice but to rise. And when that happens, the yield on Treasury bonds drops. When that happens, it not only increases market liquidity, but for the United States government, which has to manage massive debt, it's a huge benefit because it reduces the burden of interest payments. In addition, it even helps strengthen the dollar's status as the world's key currency, which has recently been shaken by tariff issues, because all the money flows into United States dollars. That's why the bill to promote stablecoins is called the Genius Bill. Genius means genius in English and Korean, so through this, we can see why this bill is called the Genius Bill. The last content prepared for today is the Minchon podcast. Today's podcast is a bit long. It's over 8 minutes long. So the topic covered in this long podcast is the robotaxi market, which has been attracting a lot of attention recently. We'll take a look at which companies, besides the ones we already know, could benefit when the era of robotaxis really begins, and analyze this topic. That's all for today's broadcast. Today is the last day of June. As we wrap up this hot month, I want to thank everyone who has been with Mijung and me throughout the month. Now, as July begins, I hope you continue a successful and happy investment journey with Mijun. Let's all keep going together until the day we retire through investing in United States stocks. Have a happy day and thank you. Hello, Mijun family. We're back again. Hello?
This is Omiju. We just talked a bit about Google, and there are some overlapping parts. The ride-hailing industry is changing rapidly, especially with Uber and Alphabet's Waymo.
Yes, but since it's such a hot topic, I think it's good to keep talking about it.
That's right. Recently, the reaction to Tesla's robotaxi announcement was a bit underwhelming, but on the other hand, Waymo teamed up with Uber to launch a service in Atlanta.
Even so, if you look at the related stocks over the past month, their performance has been a bit weaker than the S&P 500 index. It's a bit of a confusing situation, so...
The analysis article we're going to look at today addresses this exact point. In this situation, the analysis says that Uber and Waymo will eventually become the two main players leading the era of autonomous vehicle ride-hailing. What do you think, Mi-Joo-hoon?
Yes, I also found it very interesting. This isn't just about technology or the economy. It's really about who will become the game changer that reshapes the entire market. The strategic moves of Uber and Waymo definitely seem important. That's right.
Shall we take a closer look at those strategies then? First, Uber is a giant in this market. What do you think Uber's strengths are?
Uber's success lies in its scale, with a market share of nearly 76% in the United States.
76%? Wow, that's overwhelming.
Yes, and although it slowed down a bit during the pandemic, seeing it recover shows just how resilient it is. More crucially, it's not only big, but also progressing with a future-oriented outlook.
By future, you mean the autonomous driving side, right?
That's right. Not only are they working with Waymo,
and also with overseas companies in Abu Dhabi,
they were also the first to partner with companies like WeRide for autonomous driving.
They quickly form overseas partnerships.
Yes, these strengths in mobility eventually create a virtuous cycle that extends to food delivery and Uber Eats as well. So that's something we can look forward to.
Wow, now that you mention it, they're really seeing the big picture. In Atlanta, they also showcased sidewalk delivery robots in collaboration with Serve Robotics, right? I found that really fascinating. Yes.
That's right. They're trying out a lot of different things.
Then shall we talk about Waymo this time? How is Waymo doing? Their strength lies in their technological prowess.
That's right. When it comes to autonomous driving technology itself, Waymo is almost unrivaled at this point.
It started as a Google project, so it has quite a history.
Yes, it started in 2009, and in 2015 they introduced the world's first driverless car on the road. It's considered to be really outstanding in terms of technological maturity, especially when it comes to safety.
Safety? Specifically, what makes it different? It's often compared to Tesla, and that's...
There's a big difference in the sensor setup. Tesla mainly uses about 8 cameras, right? But Waymo uses 29 cameras plus radar, and the key component, the LiDAR sensor, making a total of 40 sensors.
40? Wow, I heard that LiDAR is expensive, yes?
That's right, but it's really advantageous for accurately recognizing the surrounding environment in 3D. They've accumulated over 70 million miles, 100 million kilometers of autonomous driving data. Their transparent disclosure of safety-related information gives them advantages even in a regulated environment.
They've definitely prepared a lot, even with data and transparency. Yes.
In the last 5 months, total rides have doubled to over 10 million, with a current fleet of 1,500 plus vehicles. Plans are in place to manufacture 2,000 more vehicles at the Arizona factory.
That's a steep growth rate.
So even Uber executives said that when they saw Waymo vehicles in Austin, they seemed to be busier than 99% of our drivers in Austin. They're viewing the early results very favorably. Impressive.
It's impressive that such words are coming from the executives of a competitor. Then, what about the effect of these two, Uber and Waymo, joining forces? It seems like the synergy would be huge.
It's tremendous. Looking at the Austin case, they made it so you could only call Waymo through the Uber app, and it turns out the adoption rate was 80% faster than when Waymo operated alone in San Francisco.
80%? The power of the Uber platform is really amazing, right?
Waymo's technology is built on a massive user base, which is why there's much anticipation for the Atlanta partnership. Honestly, competitors like Lyft will likely struggle in this situation.
Yes, they could gradually lose more market share.
That's highly likely, but the price is another interesting point.
The price? I thought Waymo would be cheaper.
No, it was the opposite. Looking at the real-time price comparison and onboard analysis results, the average fare for Waymo in Phoenix was $20.43, while Uber was $15.58, and Lyft was $14.44. Waymo was the most expensive.
But people still ride it, yes?
Even in surveys, 70% of respondents said they prefer driverless cars. Wow.
It's amazing that people would ride them even if they're expensive. What does this mean?
What this means is that Waymo can have some pricing power by offering new experiences or values like safety beyond just simple price competition. It may indicate a premium strategy could succeed.
The demand for safer and more futuristic technology indicates potential investment opportunities in companies developing such solutions. Is it okay to invest in the stocks of these two companies right now?
According to the article analysis, both companies are currently considered to have relatively low stock prices. Oh, really? Yes. Especially Google or Alphabet is considered the most undervalued among the Magnificent Seven. There's also the outlook that Gemini will continue to maintain its dominance in the search market through things like artificial intelligence integration.
Google is undervalued, but what about Uber?
UBR has a higher valuation than Google, but compared to its peers, especially Lyft, it's considered much more attractive. There's a value where you divide the company's value by its operating profit. And for Uber, it's about 42 times, but for Lyft, it's over 90 times.
It's much cheaper compared to Lyft, right?
And it's taking the lead in the big opportunity of autonomous driving. And since its stock price has shown a pattern of rebounding quickly after a drop, it's considered positive in the long term.
I see. But didn't they also lower their target price recently because of competition from robotaxi? Yes.
That's right. There are some analysts who have lowered their target price out of concern. This analysis article offers a unique perspective. Uber isn't taking on the risk of developing autonomous driving technology itself, but rather, as a platform, it's utilizing the technology of partners like Waymo, so the risk is actually limited. That's how they're seeing it.
I see your perspective now. That makes sense. Oh, and there's also that rumor, that Uber is trying to acquire the United States subsidiary of the Chinese autonomous driving company Pony Artificial Intelligence, yes?
There's a rumor circulating suggesting that if true, Uber's position in autonomous driving will strengthen further.
That's right. So, in conclusion, this analysis sees both companies positively in the long term, right?
Yes, that's correct. For long-term investing, both Uber and Google are recommended buys.
Wow, today's analysis was really informative and interesting. To sum up, Uber is a very strong candidate to lead the era of autonomous driving with its powerful market dominance and smart partnership strategies, while Waymo stands out with its overwhelming technological capabilities and unexpected pricing power. That's what it comes down to.
Yes, that's a good summary. They're targeting the market with their own strengths. Both
companies also seem to have investment appeal. Now I'd like to ask our Mijuan family members a few questions. Has anyone here ever ridden in an Uber or Waymo self-driving taxi? I really want to try it too. I think some of you in the United States might have experienced it, and I'm really curious to hear about your experiences. I would appreciate it if you could leave a comment about it. And one more thing, I'm also curious if there are any of you who have invested in Uber and experienced any profits. I would love for you to freely share your thoughts on today's analysis. Yes?
I'm really curious about your experiences and thoughts as well. And finally, I'd like to ask you one last question. If autonomous driving technology really becomes a deep part of our daily lives, what do you think will happen to jobs like taxi drivers or truck drivers in the future? And what kind of unexpected impact could these changes have on our entire society? I believe this is a matter we should all deeply contemplate at least once.
That's a really important question. I think we need to consider the other side of technological advancement together. That's all for today's in-depth analysis. Mijuan family, I'll be back next time with even more valuable information. Have a happy day, thank you.
No matter what you dream, the beginning is important. Be a little ambitious and grow little by little every day. Enjoy today's journey. Even if a dark challenge comes, I'm not afraid. Retire with United States stocks.